Hello everyone, welcome to my channel, and today we have my investing May portfolio review. So we'll go through how my portfolio has performed overall, how each stock has performed, what I've bought, what I've sold, any dividends I may have got paid, and we'll just talk through the performance over the month. So yeah, let's just jump straight into it. Please remember that anything said in this video is not financial advice and it is purely for information and entertainment purposes only. When investing, your capital is at risk and you should be prepared to lose any money invested. Please do your own research before investing in stocks, and good luck. So if we just start with the overall portfolio performance, we are up 1.8% this month, which is positive. Over the last year, we're now up 7.9%, so quite good compared to the last few months where you can see I was in a loss for quite some time, and then we got back up to it, and now we're staying in the profit, so that's a good start. I have sold out of one complete position this month, which is Microsoft. So I had around 0.18 of a share. It was worth like £50, £56 or something. So I've sold out of Microsoft and I've invested in my riskiest stock yet, but we will get onto that later. So let's jump into the individual stocks. So my Dividend Pie is down 1.4% this month, and then overall it's down 3.2%. I bought this when I started investing in this when stuff was at the peak, and then the massive drop we got was right after this. So if we look at the holdings, Whitestone rate is down 11%. Target's had a poor month, but it's recovered a little bit. Merck is down 3%. Gladstone Capital is down 3%. But yeah, that's just a work in progress. We'll not cover that overall. I'll do a separate video on the Dividend Pie. But that is the performance of the Dividend Pie. If we move on to Grab, as you can see, it is up 1.67% in the last month. Overall now, I'm up 3.6%, with the FX impact included. If you don't include that, I'm up 8%, which is quite annoying, but that's what you've got to deal with. So this month, I actually bought an extra 5.3 shares of Grab, which means my total shares is over 20 now. We're still awaiting news on the GoTo merger, but I think if that goes through, it'll be quite a nice reaction. And there has been protests against that. So drivers in key cities were protesting over the merge, saying that it would negatively affect the drivers and the workers. But we'll see if that has any impact on the merger going through. I'm hoping it does. Apart from my Dividend Pie, this is actually my largest holding in the portfolio. So it'll be quite interesting. I'm excited for the next earnings, I'll tell you that. The next stock on my list is RollsRoyce, which has had an amazing month. So RollsRoyce is up just under 15%. My total investment now is up 46%. I said I was only going to buy this under 700. I don't think it's going to go back down to that price anytime soon, so I might start averaging up. Like, look at that run there from April 7th, a month and a half later. Quite impressive. So yeah, so what's the crack with RollsRoyce? The CEO expects to offset the impact of global tariffs, so they shouldn't really see an impact on their performance. They're awaiting award news on the SMR contract that the government are planning on awarding. Apparently it's going to be announced sometime in June, so that'll be quite good if that goes to Rolls-Royce. It's also been announced that engines will power South Korean warships, and I think the overall increased defence spending around the world is what has boosted Rolls-Royce so far. I've only got 4 shares. I used to have a lot more. Quite sad, really. But yeah, that's how Rolls-Royce are doing. Love Rolls-Royce. Next up, we have my JP Morgan Global Growth and Income Fund. So this is up 3% for the last month. Overall, I'm down 11% and I just have under 8 shares. I think I might put more into this next month just to average my price down. But they've had the merger plans approved with a different fund, so they're now going to be in one. The recovery in the share price is just due to the broader market recovery. Obviously, it's a fund. It is split pretty much, I guess, across all sectors. It has some of the big Mag 7 stocks in there. But yeah, their recovery is just due to the overall market. They have announced a dividend of 6p per share, and that is due to be paid out on the 23rd of June. So I'll get roughly 42p. Can't complain about that one. Moving on, next we have Marks and Spencer's. So Marks and Spencer's is down 3% over the last month. I did actually buy more shares of Marks and Spencer's. So I bought 5.76 shares for just over £20. So I now own 10 shares. My overall return is just under 4%. I did make a video on why I am buying more Marks and Spencer shares, and I will continue to buy more Marks and Spencer shares. So they have announced a dividend of 3p per share for July. Not going to complain. They are opening 12 new food stores, but in the last month they have been hit by a huge cyber attack, which they expect to cause a £300 million loss. And it was announced that they're going to be claiming up to £100 million from the insurance. But that was before they announced the £300 million hit. So whether that's going to change, we'll have to wait and see. And in their earnings report, profit decreased whilst revenue increased. Obviously, Marks and Spencer's right now are investing in a lot of new stores. So yeah, there's a lot of capital expenditure going on, but that's fine. They're expanding, and they're expanding them food supermarkets, which are just bloody lovely. So that's fine by me. Keep doing it. Love Marks and Spencer's at the minute. Next up is Barclays. So this has had an impressive month. So I am up 10% for the month. Overall now I'm up 20%, but as you can see, it is a tiny position. So really I think this is just due to the easing tariffs or the easing of uncertainty, and they had strong Q1 earnings. I don't know if I'll buy more. I might eventually just come out of it and use my money to go elsewhere. Whilst I don't mind banks, they usually are consistent, sort of, and they usually are a good dividend payout. I don't know if I'll keep investing in Barclays, so I might just sell whilst I'm 20% up and put it somewhere else. That's what I've done the last few months. I've started reallocating my funds quite a lot, and it's working out well. Next up is TKO. So they are down 3% for the month. The earnings, the revenue beat by 500 million against expectations. Earnings per share was positive for the quarter. So the same time last year they had minus $1.26, but this year it was 69 cents earnings per share. But what we've got to look forward to, which I am going to be buying more shares of TKO, is that the American network deals are up this year for WWE and UFC. So as you might have seen, internationally, WWE is now on Netflix, but in America, that's not the case. It's like as if Sky Sports is running out for the Premier League and Amazon Prime is going to come and buy all the rights. So that'll be announced and we'll be able to see what the earnings will be. I think they're in a stronger position now to even bring in more money for the TV deals. So be interesting to see what happens, but I like TKO. A lot of people seem to like TKO and analysts at the minute. So yeah, as a consumer of the product, I can see where it's going. The product's quite good right now, and they're absolutely maximising any type of money opportunity for the brand. So I'm quite positive. I might be down 3% the last month. That doesn't bother me. And then we'll go on to my last stock for the month, which is my brand new purchase, which is Surfair Mobility. So they are an electronic aviation company, and they are trying to break through into the regional air traffic. They're even going to offer like a subscription-based air travel model, but they have an operating system that they're working on that is meant to be a lot more efficient for regional travelers. So that's quite good. So I sold all of my Microsoft shares for Surfair Mobility, which only happened this week. As you can see, I'm bought literally up here yesterday and it's dropped. So I'm now down 10%. So this is my riskiest investment. It's the most volatile investment, but they have a great leadership team, and they're currently halfway through a 4-step plan. And the step they're currently on, which is step 2, is working on improving profitability. The next step after that is expansion, and I can't remember what the 4th step is off the top of my head, but it seems very positive. But it is my riskiest investment, so yeah, just bear that in mind. But it's exciting. Can be exciting. I don't like seeing the minus 10%, but at the same time, it's not that I don't care, but like realistically, I don't care, purely because the research I've done makes me have faith in the company, and that's how it should be. If your research is solid enough and you say your company is down 10% or 7% or whatever, and you know it's a volatile stock anyway, it's not really going to phase you. You'll get used to it, if I'm honest. But yeah, that has been how my portfolio has performed. Let me know how you've done over the last month and what you've been buying, what you've been selling. Let me know what you think of this video and my portfolio. Leave a like if you have enjoyed, and subscribe for more investing videos, and I'll see you in the next one.